Well, hello there, my notary besties. Welcome to your general notary work training, where I help you to become a better notary. So this is series 4 and 5. I actually combined them together because they're not going to be that long. I'm going to go over a few things on pages 4 and 5 to make sure that you become a confident and knowledgeable notary when it comes to the closing disclosure. And some of the things that you can find on the closing disclosure, you can actually find on the note as well. So without further ado, let's get into it. So let's talk about assumption. If you sell or transfer this property to another person, the lender will not allow assumption of this loan on the original loan term. So what does that mean? So if your loan allows assumption, that means that if you sell the home, the buyer may be allowed to take over your loan on the same terms. Nothing will change, okay? It puts you in the mindset of, what is it called, subject to. So when a person takes over another person's home with the same terms and conditions that the original purchaser has, okay? But if your loan does not include an assumption clause, it does not allow the buyer to take over the loan, and that buyer must actually provide their own loan, apply for their own loan, and purchase the house in that manner. The next thing I want to go over is demand feature. So the demand feature allows the lender to demand immediate payment of the entire loan at any time, okay? So this one right here, this particular loan does not have a demand feature, okay? Next thing we're going to go over is late payments. Now, late payments, you can find this on the note. However, if you're going over the closing disclosure like myself, if you are the type of notary that likes to go over the closing disclosure first, then therefore you can actually go over page 4 with the client as far as the late payment. So this is just stating that if they do have a grace period. So if their payment is more than 15 days late, the lender will charge them a late fee of 5% of the monthly principal and interest. This is really important. It reads principal and interest, not including the escrow, just the principal and interest, okay? Negative amortization. So what this is, it means that the loan balance can increase even if you make your payments on time and in full. So most loans do not have a negative amortization. This one does not, but you can actually see the options of the negative amortization here, and you can read it at your own leisure. I'm not going to go over the options, but those are the options. But this particular loan itself does not include a negative amortization. Partial payment. So pretty much self-explanatory. The partial payment clause goes over if the lender will allow, or if the lender will accept partial payments from the borrower. So this one right here, this particular loan, it reads that your lender may accept payments that are less than the full amount due to apply to their loan. So this particular loan does allow partial payments. Security interest. Security interest allows the lender to foreclose on your home if you don't pay back the money you borrowed. Escrow account, if you have one, if you don't have one. So an escrow account lets you pay your homeowner's insurance and property taxes monthly as a part of your mortgage payment instead of a large lump sum. So that's why it was important over here to know that when the client is charged a late fee if they're 15 days past due, more than 15 days past due, that we charge a late fee on the principal and interest, okay? Now, some clients elect to have an escrow account, which includes the homeowner's insurance and property taxes included in that. So that 5% late payment fee is not assessed to the homeowner's insurance and property taxes, only the principal and interest, okay? So in this section, it tells whether the client has an escrow account, which homeownership expenses are included in the escrow account, and the estimated cost, okay? So this right here, estimated total amount for the escrow property taxes cost, that's the homeowner's insurance property taxes. This is non-escrow property costs right there. And then initial escrow payment and monthly escrow payment there. So there also is an escrow waiver fee, and this is right here. So what the escrow waiver fee is, you're going to see this fee here. If the client declined to have that escrow payment included in their monthly mortgage, there'll be a fee for that. And if there is a fee, it will be shown right there. Page 5, we're going to go over total payments. Tells you the total amount of money you will pay over the life of the loan if you make the scheduled payments right here. These are the total amount of monthly payments. The finance charges, that tells the total amount of interest and loan fees that the client will pay over time. So this is interest. Ooh, that's a lot. Amount finance. This is of course the amount finance that they're paying up front. That was the loan amount. And then the annual percentage rate, it just measures the actual client's loan cost over the loan expressed as a rate, and this is not their interest rate. They may see that and be like, is that my interest rate? No, it's not your interest rate. And the total interest percentage, which is also called TIP, this right here, This number just helps the client understand how much interest they will pay over the life of the loan and lets them make comparisons between loans, okay? And I'm going to go over the appraisal right here. So what the appraisal is, the lender uses an appraisal to decide on how much your home is worth, or the borrower's home is worth, and the appraisal is conducted by an independent professional in our appraisal, and then the homeowners will actually receive a copy of that. So let's go over the contract details. This right here is just stating that it's important for the client to go over their contract details. So their promise to pay is the note, and then their security interest, also known as a mortgage or deed of trust. This is what they'll go over. That goes over the contract details, and that goes over their terms and conditions. Liability for foreclosure. This right here, if the lender forecloses on the property and the foreclosure does not cover the amount of the unpaid balance on this loan, it actually tells, in this case, what will happen. This right here is checked. You can actually read that at your own leisure. And then the most important thing, last but not least, that I wanted to go over, if there are any discrepancies in the terms and conditions or the loan amount, anything of that nature, this is who you're contact, because this is the lender right here. This is the lender. That's the name of the lender, and this is the contact name, Joe Smith, and this is Joe Smith's phone number, and this is Joe Smith's email, okay? If you have any questions for the title company as far as how they would, and this should be in the notary instructions, how they would like to receive their payment, if it's cashier's check, personal check, wire, this is the contact information for the title company, which is also called the settlement agent. Sarah is the contact person. This is Sarah's email address and phone number. And then you can go ahead and ignore the real estate broker, because they don't have anything to do with the actual transaction itself when it comes to the terms and conditions and when it comes to closing. These two people, settlement agent and the lender, that's who you'll be in contact with if you have any issues with the paperwork. So hopefully this helps, and I'll see you next week, my notary besties. Bye.